Hello, today is Wednesday, the 15th of April, 2009. Brian Shannon here from Alpha Trends. We had a mixed day here today. We saw a green candle in the NASDAQ, which means that the close was higher than the open. As we'll see shortly, it was a pretty choppy day, but finished on a very strong note. The NASDAQ did lose 9 cents today. It does remain above this prior level of resistance, which is a bullish event, obviously. It came down and actually came close to touching it in there today as well. So that level does continue to hold significance for this market, as does the 10-day moving average, as we closed just above that here on the closing basis after dipping below it intraday. We do have a rising 10, 20, and 50-day moving average. We continue to see that volume is very low and declining, not just on a daily basis, but that 20-day moving average of volume as well. Again, only price pays, and if you're fighting the trend, it can get very expensive. But right now, what we're seeing here on the 10-minute time frame is we've seen this pattern of lower highs and lower lows in the Nasdaq. And what we saw, we have to really back it up a little bit further to the beginning of this trend, because these markets, the Nasdaq did break the downtrend line, basically, or the uptrend line rather, but we didn't see a panic sell-off emerge from there. The average price since the rally began is about $30.20, and when we look at this 30-minute time frame, just to so it's not as scrunched up, we can see here that this trend line since the actual I'm sorry, the chart before shows the includes the low from the ninth. The trend line from the move itself, actually right here, does remain intact. We have a rising 5-day moving average, so we're getting a lot of mixed messages from this market. We continue to see that some of the smaller, more speculative stocks are running, and the financials had another great day today. But we'll continue to be cautious here, because the magnitude of this recent rally does leave it in a condition where one of these big companies could report earnings and knock this market down pretty hard. But it does seem as though there's buyers underneath this market for now, and I think you've just got to be cautious either way, in particular because we do see that that we're in the middle of earnings season, and we're getting a lot of volatility based on the companies that are reporting. The Russell 2000 was up 69 cents, or 1.5% today. So this market. Again, we're seeing these higher lows intact, and now this level will take on further significance today, just near that just under $45 a share. This is what appears to be our new higher low in this uptrend. We have a nice pattern of higher lows and higher highs here on the daily time frame. This will continue to be an area of focus for a lot of people. Doesn't mean it will be resistance. A potential area of resistance is what you want to look at it as. Same thing here with the volume, light volume, diminishing volume. But again, the only thing that pays is price, and we saw that the market flirted with its rising 5-day moving average and found buyers there. Looked like maybe it was going to break down here late in the day, but then the buyers came in in the last half hour, really. And let's take a look at the daily chart, or just today's chart of the Nasdaq. You can see that the buyers came in at the end of the day in that last really hour of the day, pushed back above the VWAP in the final half hour, but really just a back and forth choppy action in here today. Personally, I felt fortunate not to lose money in here today, because the trends just didn't seem to be sticking for very long. So back to the Russell. The Russell, we're at a potential area where you would expect the market may encounter resistance. It doesn't mean we're just below resistance. We're only at potential resistance here. Okay, there's a big difference. There's after the fact, and there's the potential. This trend line does remain intact, and I think it's important to look at it from the ninth, the low of the ninth, rather than the low of the 10th that I've been looking at. It's either one. They're both still intact here, but this level near 45 is going to continue to be a very important level. It was prior resistance here. It's where we met this trend line today, and it's where we found support over the last couple sessions. So breaking below 45, I think could breaking below and staying below for a half hour or so could lead to another leg lower. As far as resistance goes, well, we're back above these highs. I'll take a look at that 10-minute time frame, we pushed past some recent resistance here from yesterday afternoon and today. So we could be gearing up for another push towards 47. And on the NASDAQ, we're still, I think we need to see some more back and forth action here. It is trapped below that 5-day moving average. And if that starts to flatten out in the market, in the market, that is the NASDAQ remains below the NASDAQ, then that could spell further trouble. So I said it earlier today. The market seems like it's at a crossroads, and some kind of catalyst. It seems as though it's on the horizon and about to make this market really get some directional bias here in the short term. The financials did come right down to that 5-day moving average. Yesterday I thought that I wouldn't give much faith to the 5-day moving average holding it as support, but that's exactly where the buyers came in today, at that rising 5-day moving average. So it continues to be a very important level to continue to watch. Yesterday we were looking at a 3-day VWAP. Now we take a look at the 4-day VWAP, because that's where the average price since last Friday's gap higher. That's the average price that people have paid in these financials, and the buyers clawed back and found took back control since that move. So impressively, it's back above the 4-day VWAP. We've got some support here near 1040, potential for support on any pullback, and I think that you've got to look at this as a very important level now as well, just at about $10 a share, and then of course below that is that 975 area, which had broken with a gap higher. So the financials on the daily time frame, we've got a pretty bullish pattern here, that it broke above this resistance. That resistance came close to being tested in here, and we're continuing to do battle, or maybe heading back up to do battle with this next level of potential resistance, which was support at about $11.50 a share from back in late December. So we're stuck between this area for now, but with a rising 10, 20, 50, and in 5-day moving average, in the market finding support of that rising 5-day moving average, it doesn't make any sense to be short right now. Wait for price confirmation until you get short. And same thing goes with the IYR. Still, a lot of people are talking. A lot of smart people are talking about the fact that buildings are empty, and that this is the big area that's kind of has gone unchecked and really needs to experience a much bigger drawdown. But in terms of the stocks, but since it broke past this resistance here at 28, that level was tested. It pulled back to the 10 and 20-day moving average, and now we've got a rising 10, 20, and 50-day moving average, with the 10 above the 20 above the 50. We had a pull back to the 10-day moving average yesterday on volume, but today we saw an increase, heavier volume, as the market rallied back up. So I think there's a lot of shorts getting squeezed in here. You can look at this 30-minute time frame and see that we've got a nice pattern of higher highs and higher lows. This level near 28 is going to be an important area. We have a rising 5-day moving average. So just when it seems as though they're bringing these markets down to the level where they ought to break hard, the buyers seem to come right back in, pressure the shorts, and then we get these really strong rallies. And if you look at the individuals, I traded Taubman Company here at the end of the day, TCO. Quick, there was a quick dollar move here in the last hour. The daily chart still, for a lot of these, they're healing, and they're broken stocks. I wouldn't be an investor by any means, but the big one is this Simon Property Group, and it closed at a new high for this move as well. So the IYR, I don't think you want to be playing with this thing, except for scalps, in terms of what most people play is the SRS, and you can see the SRS close looks like a closing low, and very volatile in here, dropping from 34 and change down towards about $4 in that last hour. So huge percentage movers, 12% loss in the last hour. You have to be very quick in trading small if you're involved in these, and the key really is to be trading small, and to be trading in the direction of that daily VWAP. Basically, in the IYR, the buyers had control most of the morning. it looked like it was going to break down, got back above that daily VWAP. The daily VWAP was rising all day, and I think this big volume surge in here was a lot of shorts getting squeezed pretty hard. So this group looks like it's continuing to move higher. Next potential area where it should encounter resistance is up near 33. But again, it's going to be very news oriented. The moves in these markets, which is why what continues to really keep the danger level very high in either direction. So hedge with options or use options as a speculative position, whatever. But the S&P 500 came down, touched upon this trend line for the third time, and I didn't think it would do it, but it bounced strong from there. I was kind of getting ready to position myself for a break, and think that even though I say all the time a break of trend line doesn't mean that the market is going to change direction. It means that the rate of, in this case, in an uptrending trend line, that the rate of ascent has slowed. And sure enough, we had seen that this level near that 84 area did act as support. We had a rising 5-day moving average. We had that trend line. I think a lot of people are looking to get short this, but until the evidence is there, you can only do it for very short-term trades.